Good morning, this is the latest market news. I'm Uliana. Asian shares fell on Tuesday in line with a global decline led by falling oil prices and fears about the European economy, with stocks in Japan leading losses. The Nikkei 225 fell 2.6%, hit hard as a stronger yen overnight hurt many Japanese exporters who suffer when the domestic currency rises. The Australian benchmark index, which is particularly sensitive to commodity prices, fell 1.8%. Those moves followed a 1.9% slide in the Dow Jones Industrial Average and as US traded crude oil fell below $50 a barrel. Manufacturing activity in the region hasn't gotten a meaningful lift from the fall in oil prices, with Chinese manufacturing activity contracting and with markets more sensitive to global market moves. US crude oil plummeted 5% to end lower on Monday, touching lows not seen in more than 5.5 years, amid further evidence of a global supply glut. Crude oil futures for February delivery, the most actively traded contract, plunged $2.65 or 5% to close at $50.04 a barrel on the New York Mercantile Exchange Monday. In the currency market, the US dollar traded in the mid-119 yen range on Tuesday. In early trades, the dollar was quoted in a range of 119.42 – 119.53 yen, down from 120.38 – 120.39 yen in Tokyo. The Australian dollar rebounded slightly against the US dollar after Monday's losses. In early trades Tuesday, the local currency was trading at $0.8097, up from $0.8050 on Monday. Tuesday is a busy day for economic news, in part because a blur of updates are scheduled for PMIs on both sides of the Atlantic. US ISM Non-Manufacturing Index 15 GMT. Economic output in the US services sector is rising at a solid pace. In fact, the ISM Non-Manufacturing Index in November jumped to its second highest reading since the indicator was launched in 2008. Economists think that the ISM reading for December will fall modestly to 58.0. But that's still well above the flash estimate of 53.6 for last month's PMI estimate. One reason for thinking that the ISM data may be overstating the strength of growth in the services sector is that a similar gap was unfolding in the manufacturing indicators. It was the latest market news provided by ICO FX. Goodbye.